here on the floor at FinTech Nerd Con in Miami. Annual volumes that are exceeding Visa and MasterCard combined together.
Total volume is about 20 billion.
The end of October, we were seeing reports of anywhere from $46 trillion to $50 trillion.
We're trusting them that they're not taking any funds from bad actors.
Last month, we went from a volatility score of 60% to 40%, and then back up to 80%.
You take a $100 bill, there's no way that you can see every single physical wallet that had been in since it was printed at the Fed.
They have made a bunch of announcements about supporting stablecoins, settling stablecoins, moving stablecoins.
Adding payouts to digital asset wallets is the next logical evolution of the networks.
The tokenization of real world assets is the next frontier.
You know, I hate to say it.
Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid. You're building a fintech product. You want to offer digital assets, but wallets? That's the hard part. Security, compliance, key orchestration, blockchain integration. That's why fintechs, payment platforms, and custodians choose Dfns. They provide wallets as a service that's API first, multi-chain by design, and secured with MPC. No single point of failure. So you can launch across over 50 blockchains, automate policy controls, and stay audit ready without managing private keys. Stripe's Bridge powers crypto payments through Dfns. MoonPay scales wallets securely with Dfns. Sphere grew without compromising on control or compliance. Even major FIs like Fidelity, ABN AMRO, as well as custodians like Zodia and Tungsten trust Dfns to power their on-chain infrastructure. Developer ready, compliance approved, production grade from day one. If you're building in payments, exchanges, OTC desks, market makers, or DeFi, Dfns wallets work the way you need them to. Request your demo at fintechconfidential.com/DFNS. Dfns, secure wallets built right.
2025 has really seemed to be this year of stablecoins. You've got annual volumes that are exceeding Visa and MasterCard combined together. You've got tons and tons of banks and other folks that are starting to get really interested into it. We had the Genius Act pass at the beginning of the year. There's just so much momentum around this. For those of you who don't know, I am the CEO. I am founder of an advisory firm called Voalyre, and we are recording Web3 with FTC by FinTech Confidential here on the floor at FinTech Nerd Con in Miami. This has been a lot of fun. Keith, welcome to the show.
Yeah, it's good to be here. I'm glad we're in Miami. It's nice to have a break from Vegas. It's also nice to be in some warm weather versus the cold that's up in New York and New Jersey, where I'm from.
It has already started to cool up there.
Yeah.
So folks, Keith has been in the fintech game for quite some time. He's made stops at First Data, American Express. Right before becoming the GM for North America at BVNK, he stopped at Cross River for a little bit of a beat and headed up all the payments and everything over there. So it's been really cool to see that. Keith, what I wanted to start off with, we don't have a whole lot of time, so I'm going to just dive straight in.
Let's do it.
What was it looking from the traditional payments, banking, fiat side of the house that really got you intrigued and interested to make the move, make the jump over to BVNK?
The one employer that you didn't mention payments related was Western Union. I started my payments career at Western Union when First Data used to own them. That was my first exposure to payments, but also my first exposure to cross-border payments. I've done a lot of different things in payments, as you mentioned. Most recently, when I was at Cross River, we were doing a ton of RTP FedNow, so instant 24/7 payments. Then we were also supporting a lot of stablecoin infrastructure providers who were coming in, and maybe Circle specifically, we worked with them a lot as one of our clients. We provided them an FBO account, and just seeing what they were doing in the space and the potential that stablecoins had for some of the same use cases that we were deploying with RTP FedNow, but then also a lot of the cross-border use cases that are a challenge. And despite years ago when I was at Western Union, it was a challenge. Despite all these years after that, it's still challenging to send money cross-border. We've been in and out of crypto. We went to the FTX Bahamas conference, the notorious FTX, and SBF was on stage with Bill Clinton and Tony Blair. In hindsight, it was so surreal. And my one takeaway from that, well, two takeaways, Bahamas is awesome. The only use case that I could wrap my head around was the cross-border use case. It wasn't calling out stablecoins specifically, but very clearly, in order for payments to work, and if you look at like the first line of the Bitcoin white paper, it talks about payments, right?
Yep.
So that's where I just got really interested in stablecoins through all of those different things. And when BVNK came around and said, hey, we're going to launch in the US business, I really thought it was the right opportunity for payments within the US, recognizing that there is a need for instant 24/7 cross-border payments. That's what brought me to BVNK, and we've seen tremendous growth. We're about a third of our total volume. Our total volume is about 20 billion. The Americas business makes up just about a third of that.
You know, you talk about the 20 billion. If you really look at, you know, I overarchingly said that it's greater than Visa and MasterCard put together. Depending on what report and how you calculate the numbers, as of the end of October, we were seeing reports of anywhere from $46 trillion to $50 trillion in money movements and stables. Everybody's arguing over how many were bot manipulated versus individual transactions. I think the really cool thing that this year has shown us is that over the last 2 to 3 years, the pilots that everybody was looking at, whether it be with a traditional digital asset, which I agree, I had the same thoughts about leveraging blockchain, especially diving into Bitcoin seemed to be the one that if we could figure out how to speed it up, and the Lightning Network did a lot for that. That was a really good piece, but the volatility has still been crazy. Last month, we went from a volatility score of 60% to 40%, and then back up to 80%. So it's pretty crazy with that piece of it. Although it feels like we've kind of jumped out of the proof of concept land, there's still a lot of that going on. But what have been the use cases and scenarios that you've seen that have transitioned from, let me try it, to now this is something I'm going to use every day in my business?
Yeah. To be fair, it's still very much in a proof of concept or pilot mode with many of the companies we're talking to. And the use cases are so varied. You could talk about stablecoin pay-in and then payouts. We've seen both use cases. The payout use case, I would say, has the most traction. That's probably for a couple different reasons. One, as we're talking to banks and traditional payment companies, we spend a lot of time educating them on compliance and BSA/AML. And obviously they're very familiar with BSA/AML, but educating them on what that looks like on chain, right? There are a lot of similarities, but there's also some differences. So as we talk through what you can do on chain from an AML perspective, what you can monitor, they get comfortable with on-chain payments, but they want to test payouts first. Stablecoin payments, they're always push payments. So if you're the one pushing, you have a little bit more control on who the recipient is. But we are seeing quite a few pay-in use cases as well, like a checkout experience. I think that's going to be very vertical specific. Most often it's a cross-border. More often than not, it's higher ticket transactions, where the cost of the traditional fiat payments, whether that's, again, sending a SWIFT or a card payment, is substantial to the point where if they've got ready access to digital assets. So that's the pay-in. Going back to the payout use cases, a lot of gig economy workers who are dispersed throughout the globe. You know, I think the pandemic helped us realize that you can do so many different jobs anywhere in the world. It's truly a global economy now, but payroll and getting paid, oftentimes there was still that friction point. Now with stable coins, you're able to pay someone anywhere in the world without having to go through the traditional fiat rails.
A lot of the things that it sounds and feels like with BVNK is it's that core plumbing that just kind of moves stuff around. One of the things I thought was really interesting is the way that you all have structured things. You've got the fully managed for those folks who want the benefits without all the heavy lifting, but then you've also got the, I don't know if I would call it unmanaged.
self-managed.
Self-managed.
Unmanaged could mean a lot of different things, but yeah.
But the self-managed side of the house for those folks who have the technical acumen, they just need the ability to do all these different things. Where are you seeing the forward movement? You know, I would think it'd be on the fully managed side of the house, but
no, you're right. And I think the way we talk about managed versus self-managed, managed is the full stack BVNK offering where we're providing the digital asset infrastructure, but we're also providing our fiat infrastructure. So that includes licenses, our compliance, both on-chain and fiat transaction monitoring. It includes we're a UK EMI, we've got a multi-EMI, a Spanish VAS, multiple MTLs, bank accounts, so we can move in and out of fiat across US dollar, euro, and pound sterling. So that is all encompassing. That's our managed solution. And then for a regulated institution, there is a self-managed institution. They don't need us for fiat. They've got the licenses. In reality, depending on who we're talking to, even if we are talking to a regulated institution like a bank that doesn't need us for fiat, the reality is for them to move, if they've never done anything on chain, to move to a fully managed solution or self-managed by the bank, that's a giant leap because you need to build up this expertise, this on-chain expertise across all the variety of different risk functions.
What do you think is the biggest gap that you see happening when someone says, I'm ready to go self-managed, I'm regulated, I know what I'm doing when it comes to AML, BSA, I know how to make money move, I know the transaction, like,
I mean, you talk about key storage and they're like, what? What's that? Like, or you talk about, all right, who's gonna provide your liquidity, right? Where's your trading desk? What about Chainalysis or TRM Labs? And they're like, who's that? Like, and then I think AML, I would say, is the biggest point of, not friction, but the biggest point of education.
How would that be different than what they're already doing today for their tradition?
So for fiat, so the comparison that we like to use is you take $100 bill. There's no website you can go and look up that serial number of that $100 bill and see every single physical wallet that had been in since it was printed at the Fed, right? Well, with on-chain analytics, you can do that, right? You can see the wallet that held that digital asset, and then you can also monitor it as it leaves. You know, you're no longer the custodian. It goes to your customer wallet, to your customer's wallet, to your customer's customer, and you can monitor it both all the hops it took before it came into your possession, and then all you can do ongoing monitoring.
It makes me think back to the comment that I've made over and over and over again. I mean, I've been in the digital asset space since 2013. The point that I was always making, it's immutable record.
Yes.
Which means that if you're doing something wrong and you're being nefarious in some way, it's not a matter of if you get caught, it's when they figure out who you are.
Yeah. Support provided by Skyflow. What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
I hate to say it, but like in the fiat world, trust is very important in both worlds. But the idea is like take correspondent banking. You're trusting the other bank, right?
Yeah.
You've got their Wolfsburg questionnaire. It's like, all right, we're trusting them that they're not taking any funds from bad actors, right? That idea, you don't necessarily need to have as much trust in on-chain payments.
As you talk about trust, the place that brings me to that, at least in North America, there's a huge level of trust in Visa and in MasterCard. And they have made a bunch of announcements about supporting stablecoins, settling stablecoins, moving stablecoins, participating for part of their agentic commerce piece of the house. I would love to get your perspective on what that actually means in the overarching market context. And I may throw in a couple little ones in there.
It's another payment rail. There's been initiatives around open banking and working with the traditional fiat rails that both networks have looked at through different acquisitions and different initiatives. And then I think stablecoins, both networks have been testing stablecoin payments for quite some time. They've been able to do a lot more outside of the US, given what the regulatory environment was. If you think about both issuing and acquiring, settling on-chain transactions to issuers and acquirers, that has been happening in Europe for a couple years now.
I don't think a lot of people realize that, though.
Yeah, no, you look at the press releases, I think Visa was 2023, 2022, and MasterCard similar, and really cool use cases whereby on the issuing side, the issuer can settle 24/7. They don't have to post collateral, which is sometimes a challenge, right? The cost of funds can start to increase for these issuers. So, settling on chain because it's 24/7, you don't have to worry about that collateral, right? So there's the issuing flow. And then on the acquiring side, it's getting the funds to a merchant faster. You mentioned I started my payments, or I spent some time at First Data, and that was always a pain point, getting merchants their funds faster and getting to that T+0 settlement, right? Think about cash. Like if I'm a buyer and you're the seller, I give you cash, you have that cash right away. If I give you a card, yeah, I know, it's a real-time payment, right? If I give you a card and it's a Saturday, you're not getting those funds oftentimes till Tuesday, right?
You're getting promised
the
funds.
Yes. Yeah, it's there's certainty, right? Unless I issue a chargeback. But so on the acquiring side, that's another use case for stablecoin payments, settling 24/7 on the weekends.
What do you see it look like with the card brands and stables just in, say, the next 12 months?
The most obvious place for them to start to do more with stablecoins, I talked about issuing and acquiring, but more specifically on their money movement products, Visa Direct and MasterCard Move, right? Both networks have done a lot of work to expand the payout tools. First, it was, Visa Direct, MasterCard Send, push to card, right? Push to debit, like an OCT, original credit transaction, right? That's what OCT stands for. Then they added pay to bank, right? And then they added pay to wallet, not digital wallet, but fiat wallet, pay to a Venmo PayPal wallet, pay to a WeChat Pay wallet, right? Adding payouts to digital asset wallets is the next logical evolution of the networks. So they'll add that, they'll add pay to wallet. We talked about the pain point in issuing pre-funding. You think about a Visa Direct push to card transaction, it's the same flow. In this case, the acquirer needs to pay Visa, right? That's the opposite of the traditional merchant acquiring flow. But if you're doing a lot of OCTs, your OCTs outweigh the pull payments, the AFTs, or the traditional card purchases, then you're sending money to Visa. And if you have a lot of volume on the weekends, you have to post collateral, you have to pre-fund an account at your sponsor bank. And that, again, has a potential material cost. We've talked to fintechs and programs where they're having to go get a line of credit or a loan just to pre-fund for these payment flows. Well, if you can pre-fund with stablecoins, you can pre-fund on a Saturday and a Sunday and any other bank holiday.
So we've talked about a bunch of different things, but one that I'm curious is, where are the surprise areas that you're like, I didn't think that this vertical was
Yeah.
going to grab onto this and decide that, hey, I want to use stable coins for this part of my business. That's kind of surprised you.
I started my payments career with Western Union. So coming into the space, I knew like, okay, dollars going to the global south, going to Mexico, getting paid out stablecoins, that seems obvious. And there's a lot of clients who are doing that. What I was surprised about was how much of the reverse flow we're seeing, whereby it's a manufacturer in somewhere in Latin America who has a supplier in the US. The manufacturer in Latin America wants to pay in stablecoins. Obviously, the US supplier wants to receive dollars. So we're seeing a lot of taking in stablecoins, converting that into US dollars and paying out via the traditional fiat payment rails.
That's really interesting, the reverse.
Yeah,
Because
yeah.
you don't hear a lot of that happening.
And that was somewhat shocking to me, but it is a pretty substantial part of our volume.
Well, Keith, I left my crystal ball at home. So we're just going to have to imagine that there's a crystal ball sitting here on the counter. If you were to look into the said crystal ball and say, this is what I see going on in stables and with BVNK, and then next 12 months, and we land at FinTech Nerd Con next year, what are the things that we would be talking about at that time?
A year, in some regards, is a long time. I think we'll see, I mean, we already are seeing a lot of interest from banks, and whether that's stable coins or we're getting a lot of questions about tokenized deposits. I think there's a lot of open questions around the interplay between tokenized deposits and stable coins. Obviously, stable coins have much more volume outside of the JPM coin, and I don't know that the volume of JPM coin, and I think they announced that they're just going to open that up to a public blockchain, so it'll be a little bit more open. But besides JP Morgan, a few of the other larger banks have been testing tokenized deposits in a closed loop permissioned blockchain. They need to open up other banks, whether it's a consortium or other models, putting their deposits on chain for payments use cases. And then the interoperability between those tokenized deposits and stablecoin, that needs to be solved. And I think BVNK is well positioned to do that. From a use case perspective, we talk about the 5 characteristics of stablecoins. We already mentioned 24/7 and instant, talked about global. We've talked about the transparency. There's not specific use cases tied to transparency, but it's all around BSA AML, transaction monitoring, and it's about what you can do on chain that you can't do in the fiat world. And then the 5th characteristic is the programmability of digital assets. That's where I'm really excited to see new use cases come out. I think we're just scratching the surface there. I think a lot of it is going to be tied to escrow for lending type situations. I'm not super close to all the different lending requirements, but I do think there's opportunity there for the combination of smart contracts and stablecoin payments to really provide a lot of value.
I appreciate hearing your perspective. Just today, I saw a post about the president of Citi talking about how she feels that the tokenization of real world assets is the next frontier for her and others in the banking community. So it'll be really interesting to see how all that plays out. I know it's been a really big piece in a number of groups that I work with. So that is really cool. Keith, we are out of time today. We could probably talk about this for a lot longer, but I appreciate you coming by. Just the way that the market is changing, it's really helpful to hear and understand how BVNK is supporting that piece of it.
Thanks for having me. Thanks to Galileo for sponsoring. Glad to be down here. Thanks, Ted.
Definitely. Well, folks, if you liked what you heard and you want to hear a little bit more of this, we're going to go ahead and be posting this up on fintechconfidential.com. You can catch us on Spotify, YouTube, all wherever you listen to your podcasts. And as always, keep moving forward.
As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords, they're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to GetHawkAI.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.